that question you asked me about how you can lose, I still been thinking about that a bit more. I really think that sums it up perfectly. It's a perfect thing to ask anyone because it's so neat and I don't know. I need to ask more traders the question, but I'm pretty sure most traders, winning or losing, are not going to say I would play against my strategy, my setup. Like I have a strategy that I play, and I'll just do the opposite. I'll buy when I'm supposed to sell. That's not what most people will say. I think I would like to properly ask a load of people that, but if they have the same reaction as me, where they say, they'd either rack up commissions or they would just cut winners really quickly and just let losers run, do the opposite, no risk management, then it really drills home the point that it's the strategy and the setups. It's not that important. It's just about positioning. And I've had this in my mind this week while I've been trading, and I think there was an adjustment period because it's so liberating when you think about this concept. You don't think about being right or wrong anymore. It doesn't really matter. You just think about entering, but if it goes against you, like entering, you need an edge as well. It's good if you've got an edge in a setup, but just enter. If it goes against you, just cut it quickly. If it's going with you, you keep it and you just lower your stop. And that's as simple as it is. You're just keeping your upside open and minimizing your downside. What I did.
But isn't that actually counter to your strategy that you actually trade right now? Like you're not really using trailing stops and so on. So
no, I wasn't. I do move of course, I don't let it come all the way back to my entry ever. I at least take a partial if I'm going to leave it that much room. So I would take a partial or I would move my stop, because it's like the worst of two evils. Do you want it to come back? You certainly don't want it. So say you enter a position and you're in profit, you're up, you're in the green. What's worse, having it come all the way back and then ending up actual as a loss, or taking a partial but then it carrying on 10x more? What's worse? It's worse taking the loss, isn't it?
No, I think it depends on your strategy. Like the guy in forgot his name. The guy that you sent me his lecture, and I read his book, and I didn't put two and two together. The guy who talks about trading is about enjoying losing. The Danish,
the alpha trader guy. No, being a good loser. Being a good
loser. I like that.
Tom, somebody like trader Tom.
Yeah. It's kind of like that's where that's the same idea as my story idea about a guy that but obviously it's an extreme version of a guy that loves to lose, because in a way that it has to be like that. I still hate losing. You said you do too.
Of course.
But in a way you have to actually enjoy it, because it's like, okay, obviously I lost within my risk parameters. I made the trade. I lost good. I executed. I lost good. I should lose, and I'm going to lose. So you should be celebrating the execution, whatever side, win or loss. In fact, you should be celebrating the loss more, because if you start celebrating wins, then you get win tilt and so on. So, but he said, for him, it's more painful because of this mindset that he has now about loving losing. It's more painful to see, to take partial profits or move his stock too early and see the trade go without him than it is to take a loss or give back a profit.
I think this is like the discretionary element, because I seem to do something different every time. Maybe I certainly you got to think about what's worse. I certainly think it's bad to be say you're 10 hour up and for it to come all the way back and then ended up being a loser. That's got to be bad, because if you keep doing that, I think like you said, you move your stop to break even, which it's another option. So at least you're not coming all the way back to a loss. You're coming back to maybe a small win or a scratch or whatever. That's slightly better, I'd say. But then it's what? And then you've always got the option to get back in again, haven't you? You can kind of observe it. If it's going to go completely against you, you then kind of you go back to your kind of unfogged state where you can just analyze things and sit calmly and think, okay, this has done something unexpected, so let me just rethink this. But I still think obviously the best thing to do is kind of flip your position, like catch every move. And look at the microstructure within the move, because it doesn't go in a straight line, and that's what I try and do. But I mean, what I started off by saying was the point is it's all about, it's very liberating to think about, it doesn't matter if you're right or wrong, just limit your downside. And the way I look at it now is I put myself in positions where I've got like a free roll. So for you move your stop to break even, and then you're still in the position. Any time you can get into that scenario where you've got a free roll, because you can't lose money on it, but it could go. That's good, I think. If you do that 100 times, you're going to get some that go. A lot of them are going to come back and stop you out. But so that's kind of what I've been doing. But something else that I overlooked, I didn't really think about my adding. Like, my entry is typically good. But then I add, when I see signs that it's working and I'm right, I just add seemingly random. I just think, okay, I'm just going to build my position here, and it obviously moves your average entry price down or up, depending on which way you're playing it, towards the price. But that can fuck you up psychologically, because then you can't move your stop to break even because it's too tight then. So I made a quick adjustment to, add more sensibly on pullbacks or close to my entry, or don't just add randomly to pull your average size down, because you might still be right. I was in fact still right, but I kept getting stopped out because I know the importance of cutting your losses. But then it's like you don't have any breathing room then if you add in stupid places. That's basically what I've been learning. Because I know it's just so important just to minimize your loss. But it's also important to give it. There's so many things that are important, they all conflict with each other. Let your runners run, cut your losses short, but how do you know if it's going to be a loss? It's a bit of a, it's a challenge. But
so this month I'm in a drawdown. I'm in a bit of a drawdown, but I've had 2 trades that were up approximately 7R each. So I'm down like 2R in total, but I had like 14R in paper profits. But based on the way I look at it, like there was no reversal signal, there was no entry signal. Like, it was just quite fast moving in the way I look at it. Like, I call it choppy. I don't know. Just for me, I like it when it's like, my strategy, low volatility, and then explosive move, and in one direction, right? But recently we've been having this kind of explosive moves in both directions. And then, so I'm in a trade, then I get stopped, and then I'm in profit, and then it comes back so quick. Like, I like it when it's kind of almost like repricing and reaching new equilibriums, and like it stops for a bit, then I can trail my stop and it's clear. But the way, I'm sure, like you say, probably at some time frame there is some market structure that you could use, but I just think it gets too complicated, right? And I'm looking at it and I just don't see any place I could take I could take partial profits, but what would it just be arbitrary? Like, okay, 5R and I take half? Or because I look at, there's no market structure that I see, unless I make it overly complicated, then I could start adding in moving averages and more support and resistance and different level. But then I think I'll end up just taking profits early. And then when I do catch that one move of the year, it will be at like quarter the size, well, at least half the size.
Yeah.
And then I miss the whole thing. So
it's you can't just drop down time frames.
Yeah, but then it gets too hard to manage because I'm swing trading. It's like, if I keep dropping down and down, then I'll never get sleep. Sometimes I'm like in a position and it's overnight and there's going to be some lower time frames, swing. Should I be trading that? No, because I just can't psychologically manage it. I can't physically manage it unless I have an algorithm, but I don't yet. So
Yeah. I'm leaning towards just maybe you should just come out of the position. If it's doing something, if it's going, I don't know, because then you miss out on the fractal. It's something I've heard is like, don't get married to a position, and I think this is one of the hardest things. It's a reason why a lot of traders fail, is because of these cognitive biases and things. And getting married to a position, it's hard to flip. But it's because you've got anchoring bias as well. You've got all these, what they called, the sunk cost fallacy as well. Like if you're in the trade and you're short and you've made all your analysis and you think this is going short, it's hard to just flip your bias completely. Like, no, it's not going short. Even because many times the chart tells me signals, like basically trend break. It's very simple. I've got a way to define a trend, and if the trend breaks, then you get a pullback and it reverses usually. But the tricky thing is knowing what time frame is in play, because if it's the 5 minute is reversing but the hourly isn't, it's going to just pull back a little bit and then dump lower again. But yeah, I think. The hard thing is the psychological aspect. Like even the good couple of trades that I did last week, I didn't quite flip. I just reduced. I heavily reduced when I saw this signal, because I thought that I know, like say the daily is doing one thing, and the daily is going from daily level to daily level, and but it doesn't go in a straight line. And on the 10 minute, it's showing me that this little trend is reversing. So I took like 50% off. I could have flipped it, but I'm scared. Then I get FOMO that it's just going to go to my daily level without me, so I can't and lose out on the fat tail. But I think I'm going to start just playing every intricate. But then you can't be too intricate, but as long as you keep things tight, like your stop loss, and if it goes without you, it's much better to go without you than to kind of go back into your entry, and at least you've taken some off. This is the mistake I kept doing on my latest trade. I didn't lose, and in fact I caught the last move. It was just right before there was a news event, I think it was on Friday, on Bitcoin, and it flicked around loads. But the hourly trend, the way I define it, never got broken on the upside. It was still going down. And that was heading to a 4-hour level that I was targeting. So I entered short straight after that news blip that fucked it all up, because it was forming a nice, beautiful, bearish pattern, flag. And it was the measured move was going straight to my target. But the news came in, bounced around, stopped me out. But then I just jumped straight back in because the hourly didn't invalidate. But yeah, I think I've learned a lot just through, I don't know, I always say that though. But I think I'm going to try and start flipping rather than just because I think normally when you're scared of doing something, it's probably the right thing to do. I think that's the thing. Like I'm scared to flip this. I'm short bias, but it's not going there in a straight line. And I'm scared to flip it because I think it's going to go without me. And that's why I don't do it. And is that a reason to not do it? The reason to flip is the chart is telling me the 10-minute trend is broken. The reason to not flip is I'm scared it's going to go without me. What's the most logical thing to listen to there? It's not your fear, is it? So I should just flip and play it back. But I'm still listening to my fear. FOMO.
yeah, but it's a valid fear, because if you flip and it was wrong, and then you get stopped on that side as well, and it goes without you and hits the daily level, then you're gonna feel really bad.
But you've got to, as long as it was my setup, so my mini setup on the 10-minute chart. The same setup I'm playing on the daily, but it's appearing on the 10-minute. So it's a reversal setup. And what I have been doing is,
Right. So I was going to say that I thought you put more emphasis on the higher time frame.
yeah, you do, of course. And I'm definitely, my target is there. It's not going to reverse past my entry. Well, but it shouldn't. It should hit the target, and it did hit the target. If basically I've got rules like as long as you don't get like a surge in volume, the volume that came in during that news event wasn't as high as the volume that was happening on my entry. That was the sign. If it had been, then I would have questioned maybe the whole setup's going to break. But the daily setup was still in play. It was still valid. It wasn't invalidated. So everything was looking good on the daily time frame or daily levels based on volume, but the 10-minute little trend that had formed going down had broken. So, and I took some off, but I didn't, and then I moved. Yeah, I need to start flipping though. I think that's what I need to start doing. But my point is, it's all comes back down to emotions and all these kind of instincts and things that go against it. It just acts as a kind of handicap, stops you doing what you want to do. Because
well, in this case, I feel like saying what you said to me the other week, it was really helpful. Like, you need to keep things simple and defined. Like, if you start adding lots of different, this is why, yeah, I think in theory I could probably like go down to the micro fractal and get a trend exactly just before it turns, and then, but it's just too stressful, and I know that
it's
the cost of doing that is not worth it, because there's so many potential places to go wrong and fuck it up and to get confused.
It's not stressful when you see it, the same thing happening again. You get confidence in it, and I know it's going to my target. It's just playing it from my entry to my target. I would have made more money if I just played it as a swing or like a 4-hour trade. If I just entered on my entry and took profit on my target, that would have made more money, because I tried to get too intricate. For example, I entered, I added, so my average entry went down, 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 and then it pulled back a bit, so I panicked and took some off. But then it kind of then stopped me out maybe, but then it kind of then started going down again. So I added, and I was getting very intricate when it would have been much easier to just leave it. But I think there's definitely more money to be made if you play all the swings. But it's still a good trade. I still made money on it, but I would have made more if I had just played it simply, I think, or if I'd executed. Yeah,
that's what I'm saying. I don't think you can assume if I executed perfectly, but in most cases you're not going to. So the reality is it was overcomplicated. And
yeah, I think this is where I have I have some stupid logic. Like I want to play it on hard mode almost. Like it's boring just to enter and then leave, go and do something and then come back. Oh yeah, got it.
That's a good thing.
But it's boring.
It should be boring.
Well, not
it should be.
Boring's the wrong word. Maybe not
challenging. Yeah.
Not challenging, but I want to play it like I want to sit there and play every swing to my target. You have to go and watch that. I mean, it's 50 minutes long, but I did a trade review of a trade where I did pretty well. I could have flipped, but I never flipped because of the FOMO of it just going to my target. But it was just, I don't know. There's a cliche about trading to fit your personality. I think that's my personality. I want to play it like a video game. I want to try and read the chart in real time, make good decisions. It's very simple. I've told you my strategy. It's just I have a way of defining a trend. When a trend breaks, it reverses up to a certain point. And then based on the volume, it's either going to do one thing or the other. And it can obviously, there's lots of permutations. But if it trend breaks, that's the first thing. I need to start taking off. I can always re-add. And I don't always... I don't know. I don't know where I'm going with this, but I've dug myself out of my hole anyway, like on a more macro level, because I sized up at kind of a wrong time probably, and things went a bit south. But I've managed to pretty much back where I started. So I just feel like I could have done it so much better, but maybe next time. And I'm also kind of doing, it's not a new, I was going to say new style. It's not really a new style. It's just a higher volume approach. I'm still, like I told you, I did 26 trades in Q1. In April, I think I've done about 50 to 100. So certainly there's something has shifted, but I think I prefer this style. And last year, I managed to do like 2 months of this style. I did over 150 trades in 2 months, and it was a beautiful, consistent profit line. And I think I went 10 days in a row making money in the green, and it was this approach. So it's not necessarily, the volume isn't necessarily a bad thing. I think it's just me having more confidence in, and also other external factors, like I don't have as much to do in my job anymore. So I've got more time to actually sit there and trade. And that's, I think it's been a blessing in disguise, really, because I love, this is what I love though. I sit there, I like to sit. Some people don't like to sit in front of the chart all day. I love it. I like to sit there, sometimes 10 hours. It depends how I'm feeling, not how long I've been, but if I'm feeling tired, I stop. But I like to sit there, and it's just me in the market, and I'm playing it, and I'm, it's rather than just having swing trading so boring for me. It's like investing. It's just, you're not actually doing anything. Like that's what that girl said to you. You don't do anything. It just goes up or down. But like making real-time decisions under pressure when money's on the line, that's what I love about it. Yeah.
Okay, I mean, forgive me, but that sounds bad. Honestly, like I get what you're saying. I know what you mean, but I feel like that's you're attracted to some fantasy there, and you should put that to one side. Like, it should be extremely boring.
Well,
I mean, obviously, like you can love trading and so on, but if you're what it sounds like what you're saying to me, but maybe I don't understand. It sounds like you're saying, "Oh, I like the adrenaline, I like the challenge," but it's not a video game, right? It's like you're managing some money, so
well, I think we have to make some distinctions here. Like,
yeah.
I agree with you. If you're gambling and you're looking for excitement and you're trying to get adrenaline rush, and the unknown is exciting, what could it do? That's bad. That's more of a gambling addiction. But if it's I don't know the answer, by the way. You might be right, but I'm just trying to distinguish what I like is. I think it's the challenge of it, that this is an extremely difficult thing to do because you're going against human emotions, and you've got to have lots of things in check. You've got to have your mindset in check. I've got an alarm now that goes off random time between 30 minutes and an hour, to almost like a posture check thing, and check, zoom out, look at all the time frames, and how's your mindset. Just check, because it's a mindset thing. Check your stops. You check you're not revenge trading or anything like that. So that's the challenge that I like. And you've got to perform like an athlete, like a professional at the highest level. I don't, by the way, if I'm not results oriented, so if I win or lose, it doesn't make me happy or sad. It's if I executed well. As long as you've got this in place, like if I made good decisions in real time, that's what I'm striving for. And that's what my whole journaling process is based around. Like if I'm following my process, following my rules, and not doing some of the things we talked about, then that's a win. So that's what I'm drawn to, not the gambling side of it, not the excitement. And I don't, like I say, when the trade is over, it's not like fuck yeah, I nailed that, I'm the best. It's more like just I can. First of all, it's a relief comes over me. It's kind of mentally straining as well to be in a position intensely as that for like 4 hours, or my average time is like an hour, average position time. But even an hour, when you're like looking at constantly flicking between time frames, constantly looking for trend breaks, constantly monitoring volume, constantly monitoring your mindset, it's tiring and exhausting. And it's like if you can come out the other side and you did everything well, it's just so satisfying. Even at this tiny shitty size that I'm trading, it's just wow, I performed. That's what I like. So
Yeah. Okay. That when you put it like that sounds a bit better. Because I was thinking in terms of like obviously learning about trading and the challenge of trading and having some goals or whatever, and then that's exciting. But then the actual execution, I think, should be really boring. And then maybe when you go back, even the journaling, the reviewing, that's all boring. The only exciting thing is to see, oh wow, I've made progress, or something like that, or I did that well. So it does fit. It's hard, I know. I mean, I'm not telling you how to do it because I can't do it myself. But like, it feels almost like you have to have split personalities, and you have to be like a robot that's just doing some accounting and executing, but you also have to have some passion for it too. Otherwise, you can't sit through drawdowns and you can't work so hard. But they can't clash. I mean, maybe it's my abstract mind, but that's another reason I wrote this story, because the story about this trader guy, because it is supposed to represent me but extreme versions of me. But then the reason I put it on paper is to like put that fantasy away, like that fantasy of like trading big and like loads of screens and like mayhem and feeling confident. I wanted to put that in a fantasy world. So in the real world, I'm just doing something kind of boring.
Yeah. The way I look at it, basically, when you boil it down, I don't know. I think it's the same for you, but on a longer time frame. It's about interpreting information, which there are a million different ways to interpret it, whether you use indicators or candles or order flow. Basically, you somehow interpret information, price information, volume information. Then you make a decision. And by the way, this isn't the important part, as we've discussed. And then you enter a position. And this still isn't necessarily the important part. But that is all part of it. And if you've got an edge in that, it certainly helps, rather than just coin flipping. That's part of it. And then it's about constantly battling your emotions and instincts and natural biases of our monkey brain to do what the chart is telling us, or what our interpretation of the chart is. Even like, what's it called? Like confirmation bias. Even you see the chart pull back, but you think, oh, it's just a pullback. It's not a reversal, because I'm short in this and it's going down. And so everything. That's the big one. That's a huge thing, because you kind of gear the information around what you're doing, and you've got to be completely objective. It's like you've got to be like a Zen monk and be completely in the zone. It's a Mark Douglas thing, isn't it? But it's in the zone. It's like, and it's just so satisfying when you come out the other end and you've even got close. You can never be perfect, but close to perfection is good enough. Or half. If I give myself a 6 out of 10 for execution, that's pretty good. I rarely have above an 8 or a 9 out of 10 for execution, because it's just so challenging. And that's what I love about it. And like I say, it's like even at this small size I'm trading, that's where the challenge is. Yeah.
Okay, so I have a question about, you basically said that you're trading slightly differently now because you have more time. So what you're saying is you've like added an extra element, but it's still within the logic of your strategy, but like you added an extra fractal, or how would you put it?
Well, I think in Q1, like I say, I've done a lot less frequency of trades, and maybe my idea of being consistent and careful and cautious is trading less and picking only things that I really like, super tight. Like, I've definitely had 7 hours sleep today. I'm definitely got enough time because I've got nothing to do for the next 3 hours, and been really strict. And that's what I've done. But I've just started, I think it's a good thing to kind of just let loose a little bit, like have less robotic perfectionism in it and just more kind of like artistic flair about it. I'm still doing exactly the same thing. I'm still looking at trend breaks, market structure, and volume. It's nothing, and I'm still doing the same instrument. But And by the way, when I was doing my slow-paced trading in Q1, I would follow the market for hours. Sometimes, many times I went sometimes, 2 weeks without trading. But I'd look at a chart for 6 hours at a time, just watching it, and I would see it like, okay, that's a 15-minute reversal, but I wouldn't trade it. I was kind of just following the market, and I'm thinking, I have been, and now I'm just trading everything I see, and faster, more frequent. So it's kind of just been more active with what I'm doing, rather than, because I'd wait for a bigger, typically at least an hour, because it goes a bit further. Like a 15-minute reversal, you're only scalping like $50 move sometimes. So it's to my entry to my target. So you've got to be quite precise. Like a 4-hour structure or bigger consolidation area has more to move. So there's more time to kind of play it. But yeah, so I think, so I don't know if that answers your question. I'm basically doing the same thing, but less cautiously. I was like super, like I had like a 67% win rate, and I was, yeah. But now it's gone down to like less than 40% because I'm scratching a lot. I'm just like a lot of small wins, small losses, and bigger wins, not as big losses. But I think I prefer this style more. But it adds more complication. Like your mindset is a bigger issue. Like if you start tilting, it's going to affect you more because you're active. So this is why I have the timer running and everything. But yeah.
So you have a name for every setup that you have, or the strategy is one big setup, and how do you look at it? Like if you're journaling, do you have like specific setups and names?
It's only one really, but it's what drives the whole market on every fractal, I think. And there's different things that can happen, but it's the biggest thing. I think the biggest edge in trading is understanding the fractal nature of the market. I think that's a huge edge because if you can see a setup on a daily time frame or a weekly time frame, then you can play it on a 15-minute time frame, and you know the destination. You know where the market wants to go because the higher time frame is driving things. So when you've got your destination, it's a lot easier to play all the chop or the lower time frame stuff. That's the biggest edge. But my setup happens everywhere. It's basically trend break. If you have a strict way of defining what a trend is, and a strict way of defining what a trend break is, and it's basically closes. Closes are very important, I believe. Then, yeah, that's it. When you get structure break, you can play a reversal. But it doesn't necessarily mean it's reversing either, because there's other things that can happen after that.
What's so important about closes?
What's so important about closes? I mean, if you want to know the whys, I don't know the why. I mean, you can talk about why close is important. Like yesterday, oil closed at X. It's a time frame, and I would say it's like the price that after all the buying and all the selling and the whole day's activity, that's where it ended up. So probably that's fair value, or that's what everyone agreed on, potentially. And if you also agree that markets are fractal, that would also apply to weeks or last month or last year. Oil closed at this price, and it also applies last minute, last 15 minute, last 4 hour. It seems less intuitive when you start dividing it up, arbitrarily, like 15 minutes. Why is 15 minute relevant? It shouldn't be, but the market is completely fractal, and it is, because I've observed it. The same thing happens on the 15 minute than it does on the hourly and the daily. I think it's to do with acceptance. For example, I can show you. I don't want to bring up a chart and bore you, but the short I was in, I can't remember. I don't know what news it was. I just knew there was a number coming out on I think it was Friday afternoon, and it affected. Do you know what I'm talking about? Where Bitcoin spiked up a little bit. Yeah, that was like it spiked up loads. But on the hourly, which was, and I'm not just picking it at random, I was looking at the hourly because that was what made the swing low. It was like, that was the move, that was the trend. I used the hourly to define that current trend. The 15-minute was in play, the 15-minute had already broken, and the 4-hour it hadn't even tested yet, it was just one big candle. So the hourly was what I was using, and I've got ways to focus the camera, I call it, because it's just data and you need to kind of interpret that data in the appropriate manner. So I focused the camera and I was using an hourly, and when it spiked up because of a news event, I actually got stopped out. This is another tricky thing. I should define my stops on closes, but I couldn't. I think there was like 46 minutes to wait or something, or maybe I didn't want to wait 20 minutes to see if it was going to close below that again, because it could have just taken off in the other direction. But after waiting like, I don't know, 10 minutes, 15 minutes, I started to see on the microstructure, like the 1 minute or the 5 minute chart, which was just a wick on the hourly time frame, that was starting to reverse. I was starting to see my setup in that. So I thought, okay, this is probably going to spike, close below and hold structure, and it did. So I got in after I got stopped out because of what I saw in the chart. And then it smashed down because it was actually a 4-hour reversal, a 4-hour setup, a 4-hour double top, and my target was based on the 4-hour candles. But yeah, if you ask me what is important about closes, I don't know, but that is something I've observed. If the trend, if it closes below the trend definition I have, then the trend is basically still valid until it closes up above that. If it's a downtrend, it's like kind of acceptance.
So let me try and understand that. So you're saying again, higher time frame is the leading indicator, right? And then everything below. So whatever happens, the higher time frame, you're basically looking for confirmation signals from the lower time frames to align with the higher time frame, and then you're in the trade, or that's it.
Pretty much. So yeah, the 4-hour. If you want to go back to, I can't remember. I need a chart in front of me, but there was there was a massive. I can't remember what the chart looks like, but the 4-hour trend had broken. Okay. Not the 8-hour, not the 2-hour had broken as well. But so I go for the highest time frame. I've got a reason. I don't want to bore you, but I have a definition to pick my time frame to focus the camera, which is consistent, always the same. So the 4-hour trend broke down. It was the chart was going up. The 4-hour trend broke, and then we were in a retracement back to the highs. So that for me is my entry. As simple as that. The 4-hour broke, so I look for the highest close on the 4-hour chart, and I sell there. And the target is the swing that took us, the last swing, or the bottom of the last 4-hour candle that made the high close, basically. But again, I don't need to bore you with the details, but it's the same every time. So I have a predefined entry and exit point, which played out perfectly, by the way, as it does time and time again. So then I zoom in to the hourly. And so when we hit this top level, I'll zoom into the 10-minute, or it was actually a 10-minute double top. As we were testing it on the 4-hour, the 4-hour reversal point was a 10-minute double top. So my setup was fractal. It was also playing out on the 10-minute and the massive 4-hour double top. It was like the left peak of the 4-hour top was a 10-minute double top, if that makes sense. So then that gave me confirmation that, okay, this is, because sometimes it, of course, can just blast through the level, but the volume is dropping as well. That's a sign of exhaustion. Are you frozen again? So maybe we need to reconnect.
Can you hear me though?
Yeah, I can hear you.
Can you hear me?
Oh no, you're back. You're back.
Okay. Oh, there we go. I came close, like a horror film.
But yeah, so basically it's just a fractal process. So the 10-minute then was backing up what the 4-hour theory was. If it just shoots through the 4-hour, then I have other ways to play the trade offside. Then, like we usually get a retracement back down to the entry point where I get out at break even. So I have a very wide stop. Unless there's so much momentum in the market, sometimes it doesn't even pull back. That very rarely happens. We usually get some pullback, and then it shoots off. But anyway, so yeah, the 10-minute was backing it up. So then the market reverses, and it's going down to my 4-hour target. But now the 10-minute is starting to form structure. And then the 10-minute structure breaks. I think, is it working? But then the hourly holds, and then it drops down even further. So now the hourly is in a downtrend. So and then this news happens and tested the hourly trend again. The high of the candle that made the low close in that current move. That's what I look for. So the high of the candle that made the lowest close. If we close above that, then the trend is broken on the hourly. If we close, and it spiked up and then came right back down and closed under it. So it's like a massive hammer candle. And that was just confirmation that shit. Okay, I'm diving in here because this is definitely the 4 hour is definitely playing out. So it's all kind of aligned. All the stars are aligned, and then shortly after, it just dumped straight into my 4 hour target. Yeah, and I was getting frustrated by this point because I kept getting stopped out, break even, stopped out again because I was trying to be really tight with it. And like I say, I would have been made much more if I just entered on the 4 hour entry and exited on the 4 hour exit. But I was trying to add to it, but every time I make a mistake or something doesn't happen well, I make a note of it and put it in my process for next time how to avoid that. And the way to avoid that this time is not just add. Yeah, I was right to add, but I was adding in stupid places. So my average price was coming down. Then it's psychologically difficult when you don't want to ever get into a drawdown, even if you're right, because it's just stressful. It's against you. You don't want to take a loss on something that's just winning. So I've got to try and add better. I just blindly added without thinking about structure or anything, which is stupid. You've got to treat it like an individual trade in itself. So next time, I will do that. If I hadn't added, it would have been easier to play.
Well, we actually look at things very similarly. It's almost the same kind of logic.
Yeah.
The time frames, fractals, and confirmation. But when you say, so you should treat every trade individually, but obviously it's like one position, right? You have multiple legs of a single position and a single kind of bias. In this case, short.
Yeah.
So what about when it comes to journaling? Are you putting that into like one average price and one trade that you track, or are you putting like each setups individually?
Journaling was a lot easier when I had 26 trades in 3 months. Now I've got like 50 trades in half a month. It's tricky, but normally I go flat to flat. So as long as I don't close it, it's still the same trade. That's how I journal it, but I think I need to rethink how I journal. Now I'm doing more frequency, and I think I just need to kind of summarize my execution somehow.
Well, I've got an issue where I'm recording. I can have multiple legs up to a point, and then if I have another. Basically, it goes up to the weekly time frame. So I can have like multiple legs on the daily, and then it becomes one weekly position. But then I may have like another signal on the weekly, so then it's a separate position, right? Or the thing I'm having trouble with though is like I can be in a trade, it's running. Like recently, I was in a trade, it was running. I had a big profit. Then I had another signal, so I take another trade, I add to the position, but it's a separate signal, so it's a separate position. But
okay,
you know what I'm trying to say?
Yeah, but it's on the one number.
So, but then that gets stopped out. So I'm down on that, but I've still got this big profit.
Right. Okay.
So, but then when I look at it in my journal, and then the other one goes to break even, so actually in the end it's kind of like a loss.
Yeah.
Or it becomes, or it's a small win if the market structure and I move the stock up. But the point is, when I look at it in my journal, it's just like, which do I put first? Do I put it the entry first, or because at the moment I'm doing it by exit. So as soon as it's exited, it's journaled. So whichever was exited first. But in this case, in the real world, I was in a trade that was in a profit, and obviously that changes the way I look at the second trade, which was then a loss. But in my journal, it just looks like loss and then like small win or break even or whatever. But does that make sense? Because so I am recording the paper profit as well, but it's not the timeline is totally different from reality. I'm hoping that I'll just remember, but I don't know if that's going to be good for when I go back and look at it. It makes no sense. It's like, what? It's like a a loss, and then I
Yeah,
break even.
I think for journaling, I mean the reason we do it obviously is to learn from our mistakes and see what works, see what doesn't work. So I think, I mean, whether you do it flat to flat like I do, or whether you do it like you've got like kind of a nested trade within a bigger trade, you, as long as you need to kind of make some kind of note about why you entered and why you exited. That's kind of the key, I think. That every decision you make, you need to record, and then that's what you learn from. Like it doesn't mean you added because of this. Like actually, that's something that I'm not doing since I've been adding, because I've just been. This is actually useful for me because I've been, like I said, I've been lumping it into one big trade, just with an average entry that's coming down as I'm short, which then psychologically makes it difficult when the inevitable pullback comes in. We test the hourly structure and you get the big sweep above and then close below. It goes against you. So yeah, it's basically make a decision. Like if I was to do that, it wouldn't be good. I'd be like, why did you add there? It was just like, it's kind of like FOMO. Like, okay, I'm right here. I'm just going to pile into this now, and now I've got a shit average entry, which is going to make things tricky later on. It makes things more difficult. I don't know. I get away with it because the edge was there, and it still hit the target. If I had no direction or target in mind, I could have really fucked it up. But I managed to do shit execution, but still come out with a pretty good profit. And I'm just trying to get my execution down. Then I can actually maximize this. But yeah, it's complicated how to journal. But I think that's the main point there. Just try and record somehow every decision you make, and if it was a good or bad decision, or how you could improve it next time.
The thing is, I think it's a bad idea to overcomplicate things. So
yeah,
and recently I've added in other factors that I'm not even actually using these in my decision making, but I think there could be something there. So I'm recording different, like for example, open interest at the time, like how the quantity of contracts. Just because I want to see one day, maybe I see something there, maybe there's a pattern there. Like it would make sense to me if there would be. Like, when interest is low and that means there's less volatility, blah, blah, blah. I don't know. Who knows? But then I worry like I'm just overcomplicating. I don't want to.
But your strategy works, doesn't it? Your strategy is like, even though it's got long periods of drawdown, it's potentially a valid. Theoretically, it works, right? It's edge. So don't try and add anything to it. You can come up with separate strategies, but don't complicate it.
I am kind of holy grail seeking, but it's partly because, okay, put it into context. So I started to track different things, so I've got my basic strategy, which is basically almost like flipping a coin, but instead of flipping a coin, it's like, is it making a high? I'm long. Is it making a low? I'm short. I have a lot of drawdowns, which is very hard to deal with. So my thought was, and maybe this is a newbie thought, maybe I'm like looking for the holy grail still, but my thought was, I'm sure there's a way to slightly refine these entries. Instead of taking every single entry all the time and having a 25% win rate, maybe I can just refine the entries a bit better. Like, for example, you use volume, maybe, I use volatility, maybe there's something else.
Yeah, sure.
And then I can get it to 30 or 35,
Yeah.
And so I started looking at these like equilibrium levels based on news events, which
you said
you told me recently wasn't very well defined. That's true, but it seems to work. Like I've got screenshots, I've got the levels, and it comes back and it fucking I don't know why I'm swearing. It touches.
You're excited.
Like even on, well, yeah, because I'm like wow, that thing in me still is like, oh my god, it's a holy grail, because I marked the level, some news event ages ago, and even on a different time frame, it's bounced through the level a long time, and every time it touches it, it stops on even just for a few minutes, and it's like maybe it's a coincidence. I don't know how to track if it's coincidence or not, but got so many screenshots where fucking touches a level exactly.
How many? What's your sample size? Is it like
Well,
20?
I don't know. Let's have a look at my screenshots. Probably no, it's probably more than 20. Okay, I'll put it into. You want the number? Okay.
Well, not exactly like 50, 100, 20.
Well, it's like
500.
three months worth, and yeah, probably going on at least 30, right? Like
Okay.
a couple of.
And when
I don't know. I need to count.
well, that's good enough. Like between 20 and 50, let's say, or 30 and 50.
More than 10. Let's put that. More than 10. More than a handful.
And you say, and then so you say it stops on the level, but how many times? How far does it move from the level? Does it always reverse and move?
Well, that's it depends, right? And I think there's another edge there. What I'm looking at is in terms of like what the market is looking at and what event is coming up, like risk event. Like I know you don't like fundamental analysis stuff. I don't either, but I know that the market is looking at it, and the big hedge funds and banks, they are looking at it. So, and I don't know what it's going to be, like up or down. I don't understand it, but I know that they're looking at it, and I know that like they're readjusting positions and rebalancing portfolios. It has some kind of impact. So the story is this: I started adding those levels and looking at them and thinking about them. And then when I had this trade in the beginning of the year, which for me was like my best trade ever, like highest risk reward return, highest dollar profit ever, like, and it was not based on those things, but they were there too. It's confluence. So it was based on volatility in my setup, but it also happened to perfectly hit one of those equilibrium levels. Then there was like CPI coming like exactly a week later, which like was for me like, banks are repositioned, the risks were skewed, people were under allocated, blah, 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 blah. And it happened. And as it was happening, I know it sounds crazy and it's easy in hindsight, but as it was happening, and you've got to believe me because you wrote to me at the time and I don't remember, you asked me if I'm in a trade or something, I don't remember. But I didn't come to you like, oh my God, I'm in this massive trade. You asked me, I told you, and I said, I think this is the low of the quarter, maybe even the year. Like I was totally confident and I was like all in, obviously with some risk parameters. And I had this feeling like I wanted to be, I just knew like everything, it all aligned. And this other stuff that wasn't a factor, but since I was tracking it, it just gave me added confidence and it made sense. Yeah. And then it played out exactly as I thought. So now I'm still tracking it. Yeah. And I'm slowly like adding it to my decision-making process. So I'm trying to refine it. I don't know how exactly to do it. Like you said, the scientific method is obviously, and I'm tracking things that I'm not even using, but just in case there's something there. Yeah, I mean, even right now, I'm looking at Bitcoin. It's like it's just bounced off the level. Like the level is 29,650. Like it broke out, it's like hit 30, bounced back exactly to that level, which makes no sense in terms of market structure. Well, it's just what I added as the equilibrium level of some GDP number that came out last week or the week before. Yeah, I mean it's actually the 4 hour. It's 29,800. Is that the level you said? 29 6. Sorry, hang on. Let me get this right. Basically 29,600. Yeah. Okay. My level's 20. I've got two levels that it hit, but yeah, it does. Wait, what is the level? 29,800. You said. There's the one day that I played previously is exactly the top of it, 29925. And the 4 hour is at 29803. This is leads on to another. I mean, let's before I move on, I was going to reply to what you were saying, but I don't know if I can remember what you were saying. What was I going to say? The first thing I was going to say was like you were saying
No, I was going to say, yeah, sure, okay. It's good to add confluence because now I understand a bit more about what you're talking about. Yeah, so because I said keep it simple. If it works, keep it simple. Why add things? But it makes. I get your point. It does make sense to potentially add things like I've added volume, and it can you can add order flow. You can layer things on top of each other. But also, you don't want to go too far because then you often have like conflicting views. And in fact, a lot of big traders, or one big trader that I really respect and seem to learn a lot from his videos, he boils it down to just fucking candlesticks. He doesn't even look at volume. He looks at tick charts so he can get an indication of volume and speed of movement, but just structure. And I think if you can do it in less, you should always. And I think there's a danger. The second thing I want to say is when you just thought about this when you said like you knew this was gonna be the low of the quarter. I'm not. You might have known, you might not have known, whatever. But what I want to ask you is, if it had gone against you, would you have been stubborn with that? I know, I fucking know. And would you like maybe you would have got stopped out, but then you would have jumped in again? Because that's the biggest challenge, I think.
Yeah, no, it's a good question. No, but I say that I know that. Obviously, maybe that's something I'm looking at in hindsight as it already went and I knew it was happening. I think what I actually said to you, I don't usually say things like I know. I'm pretty sure I said I'm in a trade. I'm really big. I think this could be the low. I didn't say this is definitely the low. And the fact is that, like for the weeks before that, I was aggressively trying to get short for a drop to 10K.
Yeah.
So that was another thing that I haven't really added, but been thinking about and noticing. Like,
Yeah.
okay, I'm trying to get short. I keep getting stopped out. And
Yeah. Me too.
other people are probably like me too,
Yeah.
except they're probably not stopped out yet. So I can use
Yeah.
the stops as going
Exactly.
the other way.
That was
So
that I was on. I was making the mistake that I was asking you about because I was married to my short bias. I wasn't really trading that time anyway, but I think in my swing, I didn't reduce my big swing, my hedge. I thought, nah, this has got to hit 10k or 13.8k or whatever. I think it might go down there eventually. It might not, and I was like, because this is the biggest thing I think, getting married to your position. And you've got to be able to just flip this. We talked about this before. Just flip it like, okay, that was unexpected. I need to reassess. That's what you need to do. It's it's the confirmation bias. What is it?
This is why I read a lot about complex adaptive systems, complex systems science theory, whatever. There's different names for it, but I like it. Like just the basic idea, about feedback loops. So the way I look at it, at any one time, the market has the potential to obviously go either way. So we look at this. We both have our different ways, but we kind of have the same target. Like I said, 10K, you say 13, whatever. So we think it could down. It could go down, but it could also go up to like 40K for other reasons. So I think the market is always in this state of like it's like a quantum. It hasn't decided, and it could be triggered either way. All it takes is like, for example, piece of news comes out, bank collapses, a big trade gets triggered, it drops, and then it feedbacks, and then liquidation, and then it drops to 10K. But it could also go the other way. Like the Federal Reserve meeting this week, they could say something crazy, and then it breaks 30K and it goes to 50 in a few weeks because of.
Yeah.
So I see it like that, and I think it's okay to be in two minds because the market is still deciding. That's what risk is. It has the potential to go either way. So it's hard to know what the trigger is. But what I'm playing with is the idea that maybe you have a bias. Sorry about the plane. You have a bias one way, but you have like some layers, as you put it. I like that idea. You have some layers, not too many, because obviously you can just get bogged down. And I worry that, in a sense, when you talk about all these time frames and you're going down to that's like too many layers. I think maybe you should have up to 3 time frames, for example. It's just my opinion. But so you have a bias, you have a few layers, and let's say my bias is I think Bitcoin's going to 10K, so I'm trying to get short. I'm using fractals to try and get a good entry. But I have my other, like my last layer, that if I'm wrong, I get stopped out, then I'm just going to go long on the break of the higher high through 30k and then
Right.
hold that position.
So you
So
don't
that's
revenge
like
trade, or you don't dive back in.
well, yeah, I try not to with that idea that I know that I can, even if I'm totally wrong, I'm still going to get in the trade on the other side. Maybe I lost a bit trying to go the other way, but it was worth it for the potential, like the I don't know, I think they call it convexity, like that's the fancy word for saying it, like the potential exposure to the fat tail I got
Right.
by trying to work into the position, possibly worth it. But if not, then I go the other way, and you know what I mean? So that's kind of what happened last quarter, but the opposite way. Like I was trying to go the other way, but then I saw it going against me, and there was all this confluence. So then I got in big and confident, and at some point I was in this huge position. My stop was at break even, and I was like, you know what? I just know, like, yeah, I just feel that it's not going to come back and it's going to reprice. I don't know. Maybe it stops at this level now. I think it broke up from 17 to whatever, 18. Maybe it stops at 18 and then it's not even a big win for me, but could go to 20, 30. Who knows? I was so confident that it wasn't coming back that I just had to stop at break even, and I was just I was out and about. I wasn't even looking at the charts. It felt really good. Yeah, every now and then I'd check in, like, oh, it's still going up. Wow, that's nice. I'm waiting for the structure to form so I can move my stop. But like it was a really nice feeling. That's why I said
Yeah.
like I feel like I've made it.
I know this feeling, and I've had it a few times myself. And what I want to say about that is something this kind of traders mentioned it before about it's easy to have false confidence. It's like it's because it is a kind of a contradiction, isn't it? Like I've been in the same position where I feel like I know it's going here for sure, and I'm feeling like I'm even willing to go a bit offside because I know we're going to end up here, and it ends up going there. But in hindsight, but at the time, I maybe have false confidence. I don't know because you can't, like, because we're contradicting ourselves, because we just said it could do anything at any point. So how can you know? And I felt what you felt. I felt like, yeah, and I've gone like made some dinner or whatever, and I'm not even stressing about it. A really wide stop because I'm just going to fucking leave this because it's doing everything that I think it's doing. It's done nothing unexpected. I'm leaving it, and yeah, irrelevant of the outcome. I don't know. I'm trying to think.
Well, can I just interrupt you? I don't think it's illogical. I think it's very, very arrogant to say, but that's the whole point of trading is timing the market. So what I'm saying is I'm not confident if the trade's going against me and I'm getting stopped. I'm not confident it's going. If I'm long and I'm getting stopped, I'm totally not confident. But when I get the signal and I'm long and it's going in my direction, at some point I'm sure about it, right? But at that point, there's no decision to be made because I'm already in the trade. The hard part is getting into the trade.
What about adding or taking partials or taking an exit?
Yeah, no, well, yeah. Then at that point, if I get another signal, then I guess I'm already in the position. Then I feel confident, but then it's a psychological thing because I know that I've got a win. I'm not going to end up with a loss.
Yeah.
But
Okay. That's a good point because your stop was at break even and you didn't ever have a stop below break even. Maybe early on, but at least once you're in the trade.
Well, the trade moved so fast as well. It was basically I was in, and like one of those trades, there was no drawdown. It just went, and then it paused, and like the first pause, I was like, okay.
Yeah, because I was thinking about shorting it at 19, but it carried on because I was married to my bias and assuming, but I needed to be more fluid.
Exactly, but that's the thing. I was married to my bias too, and I was in a drawdown to the downside. And when I saw it turning, that the fact that I was able to give up my bias, I feel like all it was me giving up my bias earlier than the market. And then I was really, I'm like, fuck, everybody's still short, everybody's still negative, but I'm not finally, and I was, and it's like
yeah.
I don't know. It just felt like I was one step ahead.
Yeah.
And that's what gave me the confidence to just believe in it.
I'll tell you one quick story. Like when do you remember I had a friend who had some correlations with oil, and we did some back testing, and it was strong data, but maybe we were backfitting a little bit. But it looked like, I don't know, 90% of the time when this happens over like maybe 50 sample size or whatever. And we maybe were cherry picking a little bit, and there was some anomalies, but nevertheless, I started trading oil with this data, and I think I had false confidence because I felt like I know it's doing this, and the first few times it did it, and but then it started not doing it. But but I felt at the time, I thought, wow, this is amazing, this is incredible. I know where it's going. I just knew. But looking back, I didn't know. I was probably just lucky that it was happening, and then things changed. But that's the biggest bit of false confidence I had. But when I'm doing my fractal trades, it's not necessarily false confidence because I'm still aware volume can come in at any moment. It has done before. There's like maybe 3 levels before it hits the ultimate target level, and my backtesting has shown if volume comes in at one of these other levels, it can just carry on and not hit my target, of course. But what I'm more doing is kind of finding a route. Like I'm like a GPS. Like I know this is my target, but how can it get there? And if I like, oh, the 15-minute trend has just broken and the half-hour trend has just broken. How is this going to get to my target? But then I zoom out more, and the hourly is still intact. Oh, and we're getting a 5-minute reversal. That's it. I'm getting in again quick because it's going to. So it's like I'm confident that there's still a route to my target, if you know what I mean. If the hourly broke and it was just going against me, then it's like, okay, so screw this. But I still do as well have the habit of.
I think
go
it's just clicked in my head. It's just I'm not fully invested in what you're saying because I'm trying to formulate what you said. Triggered something in my mind. Was like at the end of the day, it's just a balance of probabilities, right? So anything can happen, but at some point you have to lean one way or the other, right? That's what the trade is. It's directional. So, and I'm trying to put my feeling into words about this trade and what, because it sounds really bad if I'm like, yeah, I just knew it was going one way. But for example, I can say that I know, for example, that if the market moves one way and all these positions get liquidated and like there's a big price change, first of all, it shifted the psychology of the market, but also you can track exactly like how many contracts were traded, like how much money it took to fuel the market in that direction to that new price, and then it's like forming a new part of market structure, new equilibrium, whatever you want to call it. So, for example, I keep saying, for example, after a bear market, price is low, people are bearish, sentiment is bad, and then people get liquidated to the upside, and I don't know, $500 million get liquidated. I know that I can basically say with confidence, I don't know the exact number, but to take the market back down there, you'd have to get all these people short again. You'd have to get all this money coming back into the market after they've just been burned. It's almost like, that the balance of probabilities, it's probably not going to come back, right? That's what I mean when I say I know. I don't know, but I know that on the balance of probabilities, it's like no chance.
Well, but in a parallel universe somewhere, maybe Bitcoin, maybe Binance went bust, and it just suddenly smashed into 10K before it even.
Yeah, that's true. But that's again, what are the chances of that? I don't know the probability.
Right, so you're still thinking about probabilities.
It's like there's a 1% chance that Binance goes bust and North Korea hacks the Bitcoin exchange or whatever. But the fact is, like, all those liquidations, hundreds of millions, sentiment shifted. Yeah, okay, that could happen. But guess what? Probably at that point, it wouldn't even have that big of an impact because there's not that much short money. It's already the capital has been liquidated. So, and that was a signal in itself. Like FTX went down, Bitcoin dropped, but it didn't drop that hard. And then it started to turn the momentum. So it's a thing that I think Jesse Livermore spoke about and other traders, like the concept of when something's priced in. And if the market goes up on bad news or down on good news, that's a sign. That's a sign of some weakness or strength, right? Like, and in many cases, like, but he wrote to me, I don't get it. Like, I don't remember the exact thing, but like Tesla just really they've released like they've got good earnings and the stock's going down. Doesn't make sense, but yeah, because everybody knew it was and they were positioned for it, and now they're taking profit. Like it's just a function of the market. It's not necessarily logical. It's just based on liquidity and
Yeah,
positioning.
yeah.
That was a really long. Oh,
No, yeah. You're basically trying to justify knowing.
yeah, I was trying to put it into some kind of logic.
But I know, yeah, I hear what you're saying, and I'm not having a go because I did the same thing. I'm just questioning if it's false confidence because are we ever sure of anything? That's the thing. Like, I don't know. Maybe I need to think about the flip side. Something I do that I need to stop doing is getting. So I'm married to my position. I think it's hitting my target, and I get stopped out. So objectively, something unexpected has happened. Something that I did not foresee has just happened. Because that's where my stop was. It was there for a reason. And I'm be stopped out. And it's a revenge trade. And then it starts pull back again. I think, fuck, I'm going to get back in this. And I should not do that. You need to have like, unless you've got a reason to get back in, like I did with the news event, because I saw the trend and I waited and I saw the 5 minute reversal, and then I jumped back in. But if you're just jumping in because you basically you see a chart moving in your favor, you think, damn, it just stopped me out, and now it's going. It's something I need to stop doing, because there's one thing taking a loss on a stop or whatever, getting stopped out, but then it's another thing revenge trading, jumping straight back in and taking another loss and another loss. So you have to objective. It's all about getting married to your position because you haven't fully changed your bias yet. You're still thinking this is doing what I think it's doing, but it just did something unexpected, so maybe it's not. This is something I'm going to write this down because it's something I really need to be careful of. But,
you should write down that don't have kids with your position.
Yeah. Trade it, don't date it. Forgot what I was going to write down now. don't revenge trade. Revenge trade. I mean, it's obvious, but yeah.
Well, I had a conversation on Discord with some people at some point, and I think it makes sense. I don't know if you agree that maybe sometimes there's a decision to be made that isn't the optimal one. Maybe you even have proof statistically, but it's the optimal one for your psychology. So this is why I also like move my stop to break even, because it's kind of like, okay, it shouldn't come back if there's a repricing, it should just run. But I don't know, exactly. Break even is kind of arbitrary. But for me, it's like I just don't want this winning trade to turn into a loss.
Exactly.
Break even I can handle. If it did turn into a loss, I'd take a revenge trade.
Yeah.
And then after taking a second revenge trade, I'd be like, fuck, I'm an idiot. I'm not a good trader. Fuck this. I'm going to take another trade. So then it just spirals out of control. So
exactly.
It's like my stop on myself. Like I have a stop loss on myself to not have those moves.
Yeah, very often one bad decision leads to another bad decision. So you have to, and for me it was adding in a stupid place. And it seems like a good decision because it was good to add to that trade and it still went where I was expecting it to. But it, like I say, it just makes it harder when it pulls back. It's like psychologically more difficult now. But yeah, you talked about like our strategies being quite similar. Something I've noticed as well because I'm just like you, I can't really be that. I'm not really that interested in what other people do necessarily because it is, and in some cases it can actually be detrimental, and you don't really want to be getting confused with what other people do because it's not your thing. But I've been listening to this Fat Cat guy, YouTuber, and he trades order flow and volume profile. And he said something that is exactly what it completely relates to what I'm doing as well. Like, and it might relate to you as well. Like, I'm talking about like the first touch or the second touch or the third touch within a range. Like the first time it comes back to a range is the cleanest, most beautiful trade that you can take. Like if whatever level you're looking at or whatever you're doing, if you kind of enter then. But if it hangs around there kind of chopping about on, like if it's the third time it hits the level, then I'm less sure about it, completely less sure, because all liquidity has been taken out. Everyone that's been offside has already readjusted, and it's just a completely different thing. Then normally you get the fastest move on the first touch. So, and it's just something he said that it's. I thought, I thought it was just me that thought that, but no, it's when you think about it, it's like it's good. So it's good to hear. It's not because he uses volume profiling. His detail is completely different to mine, but these more abstract, kind of high level concepts are transferable across loads of strategies. I think, whether using volume profile or structure or what. And this touch we just had now on Bitcoin at 29,800. That's the second time. So I can't trade this now. It's not in my setup. It's a 4 hour level. I shorted it the first time, but I'm not going to short it the second time. It might still hold. You were asking me the other day that trade you took at Christmas, if I would have had a signal from it. I think I would on the 3 day. I think one of the main reasons I was not trading was because it was over Christmas and I really wasn't sure what to make of the low volume. I thought, is it a festive, seasonal thing, or is it actually, like if that was happening any other time of year, I think, Jesus, there's no volume here, this is exhaustion. But I don't know, I didn't know how to interpret that, so I kind of stayed away from it. But it was exhaustion on a 3 day.
Yeah. Well, for me, that was good because it was low volatility, so it was perfect. So for me, that means that it's building up the potential to explode.
Yeah.
Now, obviously, I wasn't actually trading. I think either I did take some trades, but really small size, and then I was in France for Christmas, visiting friends, and I decided like, okay, I'm not going to trade. Obviously, it's Christmas. What am I doing? But I was still looking at the charts, and I was reading about trading, and also it's a nice. It felt good because at the time I was like, in 3 months I want to like quit my job, and I was reading the Flash Crash book as well, and there was something in there about you've got to feel like you deserve the money. You've got to feel like that. And for a long time, that's something I struggled with. So I was like, okay, new mindset. I deserve it. I deserve something good. And it all kind of worked out. Like, and then I had this big trade by towards the end of the quarter or halfway through the quarter, I'd already hit my target, like target instead of like psychological target. Like a large amount of money. I can comfortably like walk away from this job. And also, I finally got what I deserved, and I feel good about it. Now, in hindsight, well, two things actually. I wanted to tell you this, and again, it's like maybe it's abstract, doesn't mean anything to you, but I do find it interesting that obviously, I've been trading for a long time, but I don't feel like I've made it as a trader, right? Because I still fuck up a lot. But I know that I've gained a lot of knowledge, skills. I can trade well, but then I also can trade very poorly. So feels like my job now is to get rid of the poor side of the equation, and I'll be a decent trader with some experience and whatever. But as I kind of hit the trade, and it was, at this point I was confident, my stop was at break even. I was just waiting for it to make market structure, and it was a big position, so it was a lot of capital building up, and I was like, okay, I felt like I've made it, like I've done it, I've made a good trade. I was patient, I was confident, I executed well. There's even some new factors in there that I've been looking at, so that I found something else as well to add to my strategy, and it worked. But as it happened, I actually felt depressed. I was like, this is it. Like, I've made it as a trader. Like, I've made that money, and that's kind of boring. And like, I don't know. Like, I don't know why. I just felt depressed, and it's really strange. And then I got really confident, gave some back. Then I realized, okay, I haven't made it. I'm still a bad trader sometimes. Uh, and something that kept going through my head before this as well, like that I know I'm not a gambler, right? Like I'm not a gambling addict, but sometimes I behave like one. And I think that's actually irrelevant to many things in life. Like you're not an alcoholic, but sometimes you behave like one when you drink too much and like it's actually quite a kind thing to say to yourself as well, because it gives you hope. Like you don't have to behave like this. This is not you, but sometimes you do, and you need to deal with it. So I was thinking about that as I was trading too much, and then I took a break, and then I had the big trade. So I felt good, but at the same time, I felt depressed, and I don't know why. I have no idea. Is that something I have to think about, or is that just some random bullshit that doesn't mean anything? What do you think, Doc?
I mean, what comes to mind is when I had some success, when I had first had some success, 2008 with affiliate marketing, and I built a load of websites. I moved back with my parents. I quit my job, moved back to my parents to save on money while I built my affiliate marketing empire, and I had some success and I made a lot of money. I didn't get depressed, but I did. Something happened. Like I kind of felt like, oh, is this it? And something shifted. Like it's almost like the journey and the chase is more exciting than when you actually hit a goal. Not that it was a goal. It's like, oh, now what? And my motivation just dropped off as well. I wasn't, because I think you have to be some kind of psychopath CEO person, to really want to keep pushing. Oh, I've made $1 million. I want to make 5 million now. Now I want to hit 50 million. I'm not like that at all. I just want to. I'll be happy just to make 5K a month from trading. That would do me, and I could that's just freedom then. Freedom points. I don't want. So maybe I need to be more ambitious. But anyway, digressing. But so about being depressed. I don't know. I never got depressed. It was more kind of just a feeling of satisfaction, a feeling of emptiness, and a feeling of now what do I do with my life now? Because I just focused on this for so long, so I don't really know how to interpret that. I don't know if your lifestyle changed, or if you're drinking a lot and partying. I don't know if that had any impact on feeling empty and depressed. But you're being an alcoholic as well. I don't know if there's like multiple things going on.
No, I think it is what you said. Like you just said, you've achieved some goal, and as many gurus like to say, it's not about the destination; it's about the journey. So if you actually reach the destination, then the story is over. You need a new one, and like you say, it is a kind of psychopathic thing. But I think it's a human condition. We're always moving on to the next thing. We're always trying, and that's probably why we've achieved so much as a civilization, right? Technology and whatever. It's not like we're like, oh, okay, we've got 720p. That's good enough. High resolution video. Let's stop. No, we want more hyper realism. We keep growing and improving.
Yeah, that's definitely a thing. I think we've evolved to normalize to our current situation in both directions. Like, if we get annoyed by something, get some bad news, maybe a week later you're okay about it again. If you get some good news, a week later again you normalize back to the baseline again. So that's why you can constantly never be permanently happy, and therefore to be permanently happy you need variety, constant variety. And variety is the spice of life. That's what.
That's why people are attracted to traveling. I think.
Yeah, exactly. Well. Yeah, it's like a drug.
Kind of an illusion. You're like, oh, new food. Yeah, it's just a healthy drug, and I think it's not even healthy because it's expensive. I think people are addicted to traveling. Yeah, there's a lot of memes.
I am. I'm missing it. Like I've got such an urge. Yeah, it's true.
Shit, I forgot what I was going to say.
I was saying like about normalizing to your current state, whether you're happy or it.
Oh yeah, it was in the Alpha Trader book as well. I've read this a lot before. I've read this study before, but it was nice to hear again. Like at some point, obviously, like nobody wants to be in poverty, and that's bad. But at some point, there's what's it? Marginal. Forgot the term.
Diminishing returns.
Yeah, diminishing returns, right? After a certain, and there's a number, I can't remember the actual number, but in the Western world, like after that, you're happy to a point, and then it doesn't actually make you happy. And in some cases, it may make you more stressed because you have more stuff to deal with, right? So maybe your 5K a month target is actually very good and very healthy. It's like realistic, it's attainable, and it's manageable.
Yeah.
So yeah, I don't remember what my point is, but it's a real factor. It's a real phenomenon.
I first thought about this like it was when I was living in a flat and our hot water tank broke, and it was so annoying. You know, when it's like something doesn't work, you're pissed off, you're just tilted, angry. So then obviously you've got, what is it, cortisol, or you've got hormones being released that make you in this state, angry, frustrated, not in the present, worried, preoccupied. So your state goes down. But then maybe 3 days of having no hot water tank, or the landlord didn't sort it out. We kind of got used to just kind of boiling the kettle and, you know, trying to work out, not pouring boiling water over ourselves, but kind of making a bath. and it was kind of okay. So you kind of normalized. And then when the hot water came back on and he came and fixed it, we were joyous. We were like, fuck yeah, yeah. We were happy. We would never have been happy. We're in the same state we started at, having a hot water tank. But because we've been on this change of state, that we had this feeling of euphoria and hope and, you know, joy, but nothing had changed from like a week ago. So this is why I mean you always kind of normalize to your current state. It's a survival thing, I think. Like if you know, everything is relative. It's all happiness is relative. That's the upshot of it, the takeaway. Happiness is always relative. So and
Yeah, it's a very philosophical thing, right? Like if there was no sadness, there would be no happiness, right? You need it's the yin and yang thing. I like that because makes a lot of sense. And in many ways, I think it's amplified in the markets because money is very much an emotional thing for many people, but it's also a logical thing. It's supposed to be rational, but it's not, in my opinion. And the fact is that yeah, the market is almost never in equilibrium. It moves from, you know, there's downswings, upswings, overshooting. Like it moves from state to state, just like humans and their emotional states.
yeah, it kind of makes you realize you got to be thankful as well. Like I was, you know, watching the F1. You see these multi-millionaire or footballers. You know, they get pissed off as well. It doesn't matter just because you got loads of money. You can still have a shit life. In fact, maybe your life is even worse. So in that respect, money doesn't bring happiness. It brings freedom, but not happiness. But we're a lot more privileged than, like, you know, some other more deprived people in the world. And they're probably looking at us thinking, oh, look at you in your house in Malta and you're not happy because your bin didn't get collected today. So you got to put things into perspective. Like, you know, we've got to be thankful for what we've got. It's, yeah. It was a good time to end.
Yeah, probably.